Hey yo, what's up guys? I hope you're doing good. Bitcoin pumped this week, crazy, 15%, and also many other projects went to the roof. But now the question arises, what is going to happen next week? How should we position our trades, or what is the trade setup for the next week? We will talk about this in this video, and I would say let's start directly marking the liquidity zones in the bigger time frames like the weekly. So we can see here is a huge liquidity zone where many people like back then opened a short position and were since then locked in this short position. Now every shorter or like all the bears got stopped out in this move up last week, and this is already a good sign for a retracement. But we could also in the future take this zone and this zone. These are also huge zones where like many people have put their stops, and if you calculate from this zone to this zone, it's already again 33%, and to the up it's 50%. There's a tool called Fibonacci retracement levels. I use it in another way. I split it into 4 parts, like the 100%, 75%, and that's etc. And that's how I build my ranges. You see, this is perfectly aligning with the golden zone exactly at 48k and also at 43k. We had before a strong zone at 28k, and there it's going to be very interesting if we retest this area, if we're going to hold it or if we're going to break down to see a dump back to 15k. So let's delete these zones and look what will happen in the shorter time frames. So since last week we were since Tuesday we were literally trading in a range, and we can also mark this here with a parallel channel. We mark out this channel, the tops, the downs, connect them. I think in the 1 hour chart it's better to see. We align this with this one approximately, because there we had the most touch points. So here we had a fake out, and exactly here we will put our down. That's where we retested on Friday. So now it's getting very interesting for our scenario. If we build up again a range or a channel, we see we are right now in the shorter time frames in an uptrend, but I would not be overly bullish. Here is a huge resistance zone, and this is a perfect setup how we can short the market. So I will show you 2 scenarios how you can short the market in this scenario, and of course how we can long the market if this results in a successful breakout. So scenario number 1, pretty easy. We wait for a breakout and a false breakout. So let me find the tool to here, the path. So as soon as you see that we break out, take the liquidity exactly here in this area from all the people who shorted the market, and then we break down, that's exactly where you open your short, exactly here. So you can already open a little position with a tight stop loss. That's what I'm doing also. I'm always putting 10% of the initial position I plan to put, and then I increase the position here to the 100% I plan. And as soon as you see, for example, here again that we break down, then you can increase it more. That's the range trading scenario. So this zone, what I showed you also in the weekly time frame, is also very interesting. So I would not, if I see we are dumping very hard, I would not take all the profits. I will wait for a break again of this zone, this area, taking the liquidity back down. And there's a saying, if you see that a price went up with no big resistance to fight, So here you see, like, we literally in few days we pumped up. Then the probability is also very high that we will also pump down as fast as we pumped up. We can see this in many scenarios. Here we pumped up, we pumped down, we pumped up, we pumped down very fast. So here we pumped up, we pumped down. So you see, if there's not a region of a lot of trading here, then there's no resistance. So you see here, like here we trade a lot, so it's like very hard to break the zone, but here it will be very easy. It can be a very easy flush. Everybody is getting hyped up because the ETF is going to pop out and everybody is going to be liquidated. So also regarding all the shorts, majority of people who shorted the market as a swing trader, or all the swing traders who shorted the market, they were already liquidated in this move up. So everybody shorted probably, like also me. I shorted this high, and then with a tight stop loss I got stopped out, and many people on this move up, they were also stopped out. So guys, there's not like enough fuel for the bulls to push more up. That's what I would say, but it is very important also to take care and to like know that maybe there will be like some market manipulation, or the ETF, there will be like some crypto news what are very positive. So that's the reason, if you enter a short position, try to risk as much as possible your risk with a tight stop loss. The second scenario I told you is a more riskier approach. So you don't wait till we break up. You can here already build an initial position with then the goal, the first target exactly here. So I see here a very big confluence. Many people shorted the market here. We stopped them out, and all the people, like, you have like a perfect scenario how you can create a good profitable short position. And if you see this, the risk to reward ratio is also very crazy. Let's look it up. We do a short position. Let's say we enter here, and we want to target this area, or even like the down of this. So it's approximately 10%, and we put our stops approximately here. That's a pretty good ratio, because I think at this point it's pretty sure that we have like a confirmation. Best case, of course, you see that the price is strong, and then you go out. So when are you seeing that the price is strong? You see a breakout, and then you see that the price is like slowly building some strength here, and then you understand, now it's time to go out of the trade, because as soon as you see the price is consolidating above the old highs, the probability is very high that we will pump up to the next zone. So guys, with this I will update you for the next trades, and till then, keep safe. I wish you lucky trading, and we see each other tomorrow. Bye bye.